It's Matt with followwallstreet.com. Thanks so much for tuning in. Today we're going to be touching upon real briefly how to trade on the daily time frame using, the daily charts using the weekly time frame. And again, if you're enjoying some of the content here, please feel free to subscribe to the channel and or head over to our website, followwallstreet.com, and certainly sign up to that twice monthly free newsletter. You certainly will not be disappointed. It's a great, valuable tool that a lot of our subscribers, free subscribers, love to use and see what's happening on Wall Street regarding the money rotations into the sectors that are outperforming or underperforming the S&P 500. So it's a great tool to have twice monthly. So again, up on the screen here, we have a daily chart of Gilead Sciences, that's stock ticker GILD, and on the bottom we have the weekly chart for GILD. And what we're going to be, I've put on the screen here an ellipse, circle here for you to take a look at. And what I want you to focus on is really the blue line. That's the 18-day or 18-period moving average. On the bottom of the screen is the 18-week moving average. On the top, it is the 18-day moving average. And I would highly suggest, if you are trading, swing trading or momentum trading, put in at least 2, possibly 3 moving averages that are going to be, that you're comfortable with. I like to use 18, 40, and 50 on my charts. And the reason why I put these circles here where they are is because, as you can see, as my cursor moves across the screen on the bottom, you'll see the daily cursor also moves on the chart as well. And on the weekly chart, we've got a rising 18-week moving average. I would suggest, if you're going to be swing trading, momentum trading on the daily, you certainly want the higher time frames. On the weekly or monthly, look into stocks, equities that are outperforming in the sectors, industries that are heading in the positive direction if you're going to be buying and to hold, so trading long. Don't be trying to catch falling knives, so to speak. So on the bottom screen, we've got a weekly rising 18, that's that blue line. On the daily, it is declining. And this is sort of your tried and true classic method for trading, using multiple time frames. What we want to do is focus on how the price point is playing with the rising 18-week moving average on the daily charts. And so what you can see here is that as the price has been falling, it does pull the 18-day moving average. But if you look down at my cursor, you can see that the 18-week moving average is still heading in the positive direction as we're moving week over week. And so there's a lot of little buying opportunities here. The signals and how you draw your lines in and trend lines, it's really up to you. But what you want to do is, on any of these pullbacks, you certainly want to see how the price is interacting with the 18-week moving average. So here, as the price was falling on a daily basis, we had this candle here that pulled back, dropped, and tested the 18-week moving average. And that week ended, and it certainly could have gone lower the next week. However, the next week, we can see that it respected the 18-week moving average. It headed higher, and on the time frame here, on the daily time frame, you can see that the price rose again. It broke that sort of downtrend channel that you could draw in on your own charts here, and then oftentimes what happens is you'll get another pullback. And on that particular pullback, it's a great idea to see again how the price is interacting with the rising 18-week moving average. Again, came down, tested it, but you can see that that week closed out higher than the previous 2 weeks. So this would be a great place to pick an entry. You also could do it a little later if you wanted to, as the 18-day started to flatten out. It's totally up to you. Just be ready for another little pullback. Be sure to set your stops lower than possibly even the previous pullback. So just wanted to do a quick video for you on that, and that's how you trade on the daily. If you're going to swing trade or momentum trade, that's how you trade on the daily charts using the weekly time frames. Look for that rising moving average on the weekly and the declining moving average on the daily. All right, good luck out there, and do be careful.